Okay, so let's start with the market outlook. It's been a funny week in the market. So, today you can see Canadian market down 3% and the US down about 1%, but that's misleading because it has been a fairly good week in the markets. So let's look at this all country world index, and we can look at it over the last 5 days. And you can see really it was like 4 days up in a row. And then today's the day where it kind of, sort of settled back down a little bit. Really what I feel is buoying the markets right now. I like that word because I do feel that there are sort of external factors that are keeping it afloat and up right now. And, really it's two things. Number one is going to be all the government support. So basically, Powell, the chairman of the Federal Reserve in the US, has just continued to say that we're going to be buying corporate debt and we're going to be flooding the markets with liquidity, that we've really never seen a government move this quickly, and a combination of governments as well as central banks moving this quickly on an economic crisis like this. So I think the investor confidence is there that this thing is sort of too big to fail, and they're going to do everything to kind of keep it afloat and keep it doing well. I think also, it was really interesting on Thursday, you saw this big jump up, and this was largely in part of a new drug. So there's, Gilead Sciences. They came out, there was a study that came out about a drug that they've been doing, and this really hit the news quite a bit. This drug is called Remdesivir. And so, all these things that basically, just popping up and saying that this is going to improve. Oh, it doesn't like my ad blocker. No, I'm going to get rid of that. But basically, Gilead Sciences came out with this remedy. It reduces the severity of the worst case scenarios. The market viewed this as like a medical, potential breakthrough. Obviously, it forced the stock of Gilead Sciences to jump up. That you can see things went up quite dramatically here, right, on that news on Thursday, but it also caused the entire market to go up. So, I think there's optimism around we're getting through this and things are going to start to reopen, and we kind of avoided the worst case scenarios from a biological perspective, as well as the continued government support. I'm still very cautious. I'm still sort of looking at the all country world index and looking at it over the last 6 months. Right, that obviously there was the crash and then sort of a rebound here, that I am worried that things are going to get worse before they get better. I think a lot of our social distancing strategies are working, which is awesome. So we avoided the worst case scenarios, right? But then now people are taking that as a rationale, saying, well, it wasn't that bad. Look, the numbers were wrong. It hasn't killed so many people. So, we should start to open back up. I'm worried about that. I think that could be a recipe for disaster. Again, it wouldn't surprise me, this sort of W, if we open back up and then have to shut things down again, that would be a huge problem. So, we'll see. I'm still, very cautious with the markets right now. I really understand that there is so much that we don't understand from a biological perspective that I'm sort of not ready to make any big moves right now. So, my market outlook, I would say, is still on the cautious side. But obviously what we want to do is keep calm and rebalance, kind of stick with the game plan. I have been taking a look at oil prices, so strange after what happened last week. You can see, price of oil, futures contracts, kind of back to about $20 a barrel, so which is where it was sort of before that big dip. So still very, very cheap. This is the Western Canadian Select. So this is in Alberta at $11 a barrel, still very, very cheap. From what I'm seeing in Alberta, that we are going to start to see some bigger problems, that they need a WTI break even of about $35 just to break even. So if it stays at $20 for a very long time, there's going to be a lot of pain. We've already started to see companies cut dividends. I think it was Husky that cut the dividend today. Shell cut their dividend. That was a big one. I want to say it was Husky. Let me see here. I believe they did, 90% dividend cut. That's just massive. So I do think we're going to see more dividend cuts in the energy space. I do think we're going to see bankruptcies in the energy space. I would say that that's a sector that obviously I still want to stay away from, that it's a good thing that a lot of us did divest from fossil fuels to completely get out of that. From there, the last thing I'll show you just that I do like to keep an eye on is that VIX. So the volatility this week has been not as calm as I was hoping. A lot of movements early on in the day, and we can see here, if I look at the 6-month chart, really it's just in the last little bit, that the volatility index is starting to come down. Things are coming down a little bit, but I would say we're still not out of the woods, that there's a way to go here before I'm ready to assume that the markets are kind of back to normal and that we can do all the normal things that we would do. I would still say we need to be a little bit cautious and understand that as we're shifting things around, really don't want to have big lags. We don't want to like sell something and then have to buy it back 3 or 4 days later, or really that those lags could still hurt us. So that's really the market overview. Happy to take questions.